Parts started as a single store in Springfield, Missouri in 1957. Today, it's a $17 billion revenue, 6,000 location auto parts chain with investment grade credit and one of the most consistent financial track records in specialty retail. If you're looking at AutoZone NNN, you should almost always be looking at O'Reilly in parallel. They're the closest comps in the entire NNN market. Here's what you need to know about O'Reilly NNN properties. O'Reilly NNN properties trade at 5.25% to 6% cap rates, essentially in line with AutoZone. Buildings are slightly smaller, 6,800 to 7,225 square feet on 0.7 to 0.8 acres, which can mean a slightly lower land basis. Entry prices run $1.8 million to $3 million. Lease terms are 15 to 20 years initial, with 4 5-year renewal options. S&P credit is BBB, Moody's Baa1, solid investment grade across the board. O'Reilly has 250 plus Florida locations with an active BTS program that keeps creating new inventory. O'Reilly's core investment thesis is nearly identical to AutoZone's, and that's actually a good thing. The aging U.S. vehicle fleet, consumer trade down during economic softness, and strong commercial and DIY dual revenue model all apply equally to both companies. What O'Reilly has demonstrated is that it can consistently outpace the broader auto parts sector in same-store sales growth. It's not just riding industry tailwinds, it's taking market share. For a NNN investor, that operational strength translates to lease security. The corporate guarantee is real, the company is financially healthy, and the BTS program means you can buy a fresh 15 to 20-year lease on a purpose-built location rather than chasing older deals with shorter remaining terms. Newer O'Reilly leases are absolute NNN. The tenant covers all operating costs, including roof and structure. Older lease vintages are worth reviewing carefully since some have flat rent or limited bumps. Newer deals commonly carry 5% to 10% rent increases every 5 years. The corporate guarantee is from O'Reilly Auto Parts, the publicly traded parent, which is the entity you want on the hook for 20 years of rent. Road frontage and visibility are critical to O'Reilly's site criteria, so these locations tend to be on high traffic corridors with strong long-term real estate utility. 3 specific things to watch with O'Reilly. First, if you're comparing O'Reilly against AutoZone on the same site or same market, shop both. You'll occasionally find O'Reilly trading a few basis points wider due to deal-specific factors, which creates value. Second, verify the lease vintage. Flat rent leases from older BTS programs have meaningfully different long-term returns than deals with 10% bumps. Third, the EV transition question that applies to AutoZone applies equally here. I'll say the same thing I said there. The current vehicle fleet is overwhelmingly ICE, average vehicle age is near record highs, and O'Reilly is the strongest positioned company in the category, but it's a factor to model over a 15-year lease horizon. O'Reilly is one of the most overlooked NNN categories simply because AutoZone gets more marketing attention, but the investment profile is nearly identical. I'm Ryan Solberg with MaxLife Commercial. If you're looking at auto parts NNN in Florida and want to see what's available across both AutoZone and O'Reilly, let's talk. Visit maxlifedevelopment.com or call 321-586-2121.